Bank of America just reporting, and Wilfred Frost joins us with the numbers. Wilf.
Yeah, some nice numbers. Nice beat here for Bank of America. Revenue $22.9 billion. The forecast was for just under $22 billion. And EPS 85 cents. The forecast was for 71 cents. And there is a benefit on the provisions for bad loans line, but it's smaller than JP Morgan's at $624 million. So less flattering of that bottom line beat than perhaps yesterday for JP Morgan's. The beats on both fee income and net interest income, but particularly the net interest income line, came in at $11.2 billion. The forecast was for 10.6. That's up nearly 10% year over year. JP Morgan's on that line was up about 1% year over year. And they are already seeing loan growth in a way that JP Morgan was more guiding to seeing loan growth in the quarters ahead. If you strip out their PPP loans, which are obviously drawing down at this stage, they saw 2.3% loan growth quarter over quarter, which is encouraging. Definitely there'll be a lot of focus on that on the call. On the fee income side, the non-interest income side, also strong, $11.7 billion. The forecast was 11.1, and like JP Morgan, very good on asset management and very good across all of capital markets. Investment banking, $2.2 billion. That's a bit ahead of forecast and includes a record all-time high for advisory. M&A boom is huge. Saw it in JP Morgan. I'm sure we'll see it in Morgan Stanley and Goldman Sachs and the others to come. And they're similar to JP Morgan on the trading. Very good in equities. That's a beat. A bit of a decline year over year in fixed income trading, but still $2 billion. Still nothing to turn your nose down at. And expenses was decent. So down quarter over quarter. We were expecting that because it was high last quarter. Flat year over year. Nothing fantastic there, but not bad like it was last quarter. And the stock, unsurprisingly, jumping there 2% or so. It was down 1% yesterday in sympathy with JP Morgan. Now jumping today in light of these good numbers. And just summing it all up, ignoring all of those individual lines, yesterday we saw JP Morgan's revenue up 2% year over year. Bank of America's is up 12% year over year.
Wilf, in terms of just the big takeaway, as we're going to see more earnings reports, both from some of the other banks, but also from just corporate America across the board, the big takeaway, do you expect we're going to see great numbers from everybody? I mean, you think when we hit Citi, for example, we're going to be surprised to the upside as well?
The big takeaway is that this is the most interest rate sensitive name, and that from yesterday from JP Morgan, we were thinking there's an era to come for those banks, but it perhaps hasn't arrived yet this past quarter. Yet Bank of America is correcting that and saying it has already started to improve for us this quarter. The question is whether they pulled that forward from future quarters or whether they will also guide, like JP Morgan did, that rising rates and loan growth having bottomed means net interest income will continue to grow from here. Also for Bank of America, very important to watch what they guide on the cost side. This quarter looked decent. The guidance will be important. And on the capital market side, Andrew, I mean, it's the gift that keeps on giving. It's less important to Bank of America than it will be to Morgan Stanley and co reporting shortly. But record M&A for Bank of America today and JP Morgan yesterday.